These two products are emergency mortgage products, you could say, and they can help you out in a bind, but they can be very tricky. They can be quite complex. So you want to make sure that you understand what they are and speak to a mortgage broker. My name is Anthony Lindsay, and I asked ChatGPT, what are two emergency mortgage tools and how do they work? I'll be unpacking that today. We'll be talking about HELOCs. We'll also be talking about bridging loans. My name is Anthony Lindsay. As I said, I've been in finance for over 30 years. I've done 10 years of debt collection, 10 years of wealth management, and I've also done lending. So when you speak to me, I'm able to talk you through products and services, not only from a position of being qualified in those areas, but also as someone who has life experience. Always remember that investing in property has its risk. Your home may be repossessed if you do not keep up the repayments on your mortgage. So, have you ever found yourself in a position as an experienced investor or a home buyer where you have a broken chain? If you're looking to purchase a property and you're an investor, are you going to buy from auction? Do you want to do debt consolidation, or are you looking to maybe do refurbishments? If you've been in any of these situations, quite possibly you've seen something online about HELOCs, or you've seen something online about bridging loans. I do find that a lot of consumers make things a lot more complicated than they need to because they see these things online, or they have these property gurus that end up in their feed, and they start exploring things. So I want to make sure that you understand what these two products are, because they can be very risky. They're not for everybody, and most people aren't going to qualify for them. Or as you understand what the criteria is, a lot of people are going to just change their mind. So both HELOCs and bridging loans are useful emergency mortgage tools, but the right option depends on your situation. Always seek professional advice and make sure you understand the pros and the cons of each product, because you will experience that people who are trying to sell you something are only going to tell you the upside. They're never really going to talk through the cons with you. So make sure you understand what the downside of these products are. Let's start with a HELOC. So, what is a HELOC? A HELOC, or home equity line of credit, is a flexible credit facility that's secured against the equity in your home. So, this is ideal for people who have 40% or more equity in their home. This tends to be a good product for people that are older, and you have to have good credit. Let me say that again. You have to have good credit. So, this is not a product if you have bad credit or if you have low equity in your home. The average HELOC customer that I see is usually in their mid 50s. So it works a bit like a credit card. It's secured on your property. You can withdraw funds and repay, draw again within a limit. So it is just like a credit card. So the two products that we're going to cover off are HELOCs and bridging loans. If you look at a HELOC like a credit card and look at a bridging loan like a loan, it's a good way of deciding which one might be best for you. The top three reasons why someone would use a HELOC. So the first one would be just emergency funds, to access cash quickly without remortgaging. There are a lot of people who are on really low interest rates at the moment. They have a lot of equity in their home. They have great credit, and they just need a lump sum of cash. Maybe they want to pay school fees. Maybe they have some home improvements they want to do. If you're looking to do home improvements, you can draw funds as needed rather than the full amount up front. Any refurbishment project you've done, if you've done one in the past, you know it always takes longer and costs more than you anticipated. So having a revolving line of credit where you can access the money when it's needed and only pay the interest on the money that you use is very useful. You can also use it for debt consolidation. So repay higher interest debts more cheaply. So, a use case for the debt consolidation may be you have several personal loans, you have some credit cards, you're paying them well because, again, this is a product for people with good credit. So, you're paying them well, you're not missing any payments, you're not making any late payments. But what you're finding is each month your balances aren't going down. So, you could use the HELOC as a way of consolidating those things that you already owe, putting them on a lower interest rate, and just freeing up some money each month because potentially, if the HELOC is the right product for you, you're now putting these debts on lower interest rates. So here are the pros. Let's look at the upside. This is the bit that if someone's trying to sell you this product, they'll talk to you about. It's flexible, so you can draw and repay as needed. So you use the analogy of it being like a credit card using the equity in your home. Let's just say you get a £30,000 line of credit. You don't have to use that full £30,000 all at once. If you're using it for a project, you could say, well, I'm going to take £5,000 out of my £30,000 limit. I'm going to start with the flooring on the project. And then as the project progresses, you draw the money out. So it's flexible. You can draw and repay as you want. You only pay interest on what you use. So if you have a £30,000 line of credit, but you're only using £10,000 of that £30,000, you're only paying interest on the £10,000 that you're using. And it can be cheaper than credit cards. So when you speak to your mortgage broker, they'll be able to go through the interest rates with you. They'll be able to go through the repayments. They'll help you plan out your project if it is a refurbishment project, to make sure that you understand the repayments and how much the repayments are going to be and how much it's going to cost you. Here are the cons. This is the bit that if someone's just trying to sell you a project or is trying to sell you this product, these are the bits that they may not tell you. So these are the cons of a HELOC or home equity line of credit loan. It's not widely available in the UK. So if you're online and you're hearing people talk about HELOCs, quite often they're people from the States. So it's a more common product in the US and in Canada than it is in the UK. But you can get a HELOC in the UK, which is why I'm talking about it. So because there's fewer lenders who do it, there may be fewer brokers who fully understand the product and can really advise you on the product and tell you both the pros and the cons. The interest may be variable. So unlike a secured loan or a mortgage, the interest might be variable. So you don't know what the interest rate will be until you've gone through the product. And when you withdraw it, it will let you know what the interest rate would be. But it might be variable. It's not a fixed interest rate. And most importantly, it's secured against your home. So this is a second charge on your home. So you're borrowing or getting a line of credit of, let's just say, £30,000. It's secured against your home. And anytime you're securing anything against your home, you need to make sure that you understand the product, understand the pros, understand the cons, and understand that failure to make repayments could mean that your home gets repossessed. So you should think very carefully before you enter into this. You should have a solid exit strategy, a solid plan for what you're going to do. What's the criteria for a HELOC loan? So what is the criteria? Who do you need to be? What do you need to look like? So you need a strong credit history. I've said it time and time again. A HELOC loan is for people with great credit. It's not for people who are struggling with their finances. So you can have no major adverse credit, no missed mortgage payments, no late payments, CCJs, defaults, anything like that. You have to have significant home equity. So this is why I say this is a product usually for older people. It's not for first-time buyers who have only had a mortgage for a couple of years, unless they pay down a huge deposit. You need to have at least 40% equity in your home to make it a viable option, because there's a maximum LTV or loan to valuation that you'll be able to end up with once you do the line of credit. So if you are very close to that LTV to begin with, it may not be a good product for you. You need a stable income. It's a loan. You're borrowing money, so you need to be able to demonstrate how you're going to pay that back. They will look at the property type. So the lender will look at the type of property. They want to make sure that it meets the lender's standards. So it's standard construction, it's in good condition, and responsible financial track record, as HELOCs require careful management. So you have to be someone who knows how to manage your finances, someone who is responsible, someone who is on top of things. A HELOC use case. So who would a HELOC be good for, or what is an example? So you're an older homeowner, you're planning on building a kitchen or an extension on your home, and it's going to be completed in stages. So instead of taking out a lump sum up front, you use a HELOC to release the funds gradually as each phase of the project progresses. Because, as I said, these projects always take longer and cost more than you originally thought. So, with a traditional loan, you would take out the full amount and you'd be paying interest on that full amount from the moment you take it out. Whereas with a HELOC, you're getting a line of credit that you only pay interest on the money that you pull out. So this way, you only pay interest on the money that you actually use while keeping the flexibility to progress in the stages. So that's the perfect use case for a HELOC loan. People ask me a lot of questions, and that's why I do these videos. But not everyone's going to find me on YouTube. So I do have a book called A Mortgage is a Really Big Loan. This book is for anyone who's considering understanding how finance works. So it's great for young people. It's not just about mortgages. In my book, I cover off a lot of different things around financial literacy. I am one of those people that is convinced that it's not that people don't have access to financial literacy. In fact, there's so much information available. I think sometimes people don't take it as seriously as they should. So if you have recently moved to the UK, or maybe you have a young person who's getting married, or a son, daughter, niece, or nephew that are just starting their life, and you want to make sure that they have a sound footing and a good foundation, good financial literacy, this is a great gift for them. The book is called A Mortgage is a Really Big Loan. It's available on Amazon, and I'd appreciate your support. So remember, I make these videos not to replace speaking to a financial expert. I don't give financial advice, legal advice, or tax advice.